Foreign exchange risk relates to the gain or loss that arises due to fluctuations in foreign exchange rates. All assets and liabilities, as well as income and expenditure denominated in foreign currency, are exposed to foreign exchange risk. At this juncture, it is important for us to understand the difference between exposure and risk. Let us say a firm has a very high level of exports and imports as part of its business, and all related invoices are in a foreign currency, say US dollars. Hence, it has a very high level of foreign exchange exposure. However, if the variability in the exchange rate between the currency of invoice, in this case the US dollar, and the domestic currency of the firm is not very large, then implicitly the foreign exchange risk is low. Foreign exchange exposure is generally classified into three categories. Transaction exposure, which refers to the risk arising from fluctuations in the foreign exchange rate between the time the transaction was entered into and the time it is settled. That means when the payment is received. Translation exposure pertains to the valuation of foreign currency assets and liabilities when consolidating the balance sheet of a multinational enterprise at current exchange rates. This could result in a loss or gain to the multinational enterprise depending on the composition of its foreign currency assets and liabilities and the direction of exchange rate movements. 3. Operating exposure or economic exposure, which measures the change in both the expected profit and the market value of the firm due to changes in the operating cash flows of the firm caused by unexpected fluctuations in exchange rate. Although transaction exposure and operating exposure are both a result of unexpected change in exchange rates and consequent impact on future cash flows, the difference is that transaction exposure pertains to future cash flows already contracted for, whereas operating exposure refers to expected future cash flows not yet contracted for. In the next session, we will focus on the tools and techniques available to manage transaction exposure. And in the 2 sessions thereafter, we will look at translation exposure and operating exposure.